Occhi. I'm a realtor with Keller Williams and the Excellence in Real Estate team. I want to thank you for joining me for this last segment of my special report on leveraging in order to buy property, whether it's residential, commercial property, investment property, with little or no money down. And in this final segment, we're talking about ways of actually raising cash when you need cash. If it's not sitting in the bank, and it shouldn't be, because your money should be working for you someplace, no matter where it is, what you're doing. Put your money to work, and that's how you accumulate wealth, as opposed to just having cash flow. All right, put your money to work. So how do you raise cash when you need it? When you found the right piece of property, and it's a great opportunity for you, and you need that property now. Okay. Well, one of the things that you can do is use collateral that you acquire from other property. Okay, if you get creative, it can create a win-win situation for everybody. But let's say you own one piece of property and you can borrow money from that property, go to your mortgage company, take that money, take that out and apply it and get a down payment from your existing. A lot of people with the raise and increases in, a lot of smart people I should say, with the increase in property value that we've seen in the last few years, let's say they bought a house for $200,000, 3 years later it's worth $400,000, they take out a second, and let's say they take out $100,000, with that $100,000 now they can go and they can buy one or two other pieces of property and they're creating wealth that way, because you're accumulating property, and property is the one thing that is always going to make you wealthy. All right, so that's leveraging the property that you already have. Okay, so, and sometimes some of the best deals that you're ever going to have is when you're really tight on cash. And then again, some of the worst deals you're going to have are when you have a lot of cash, when you're flush, and then you're not thinking about, you're not stretching yourself to get creative. So when you have cash, don't think that you can just throw money at it and it's going to be okay, because you're going to find yourself in a situation where it just may not be the opportunity that you thought it would be. All right. So where do you get cash from? All right. Well, one of the ways is to get into a loan that doesn't require, whether it's a VA or an FHA type of loan, it requires more paperwork, and the lenders who work these particular loans are more of a specialist, but they're available, and you can find them in the phone books, and you can find them in the newspapers. Just look under VA and FHA under mortgages. Now you can also get creative with money by using PMI insurance. We talked about a little bit about this earlier in this report, but PMI insurance is required anytime you have a loan over 80% loan to value. Again, I caution that you make sure that there's a clause that you can get out of your PMI once your value reaches the 80% of the appraised value and not necessarily the purchase value. Okay, so it's called a cancellation policy, and you want to make sure that you're familiar with their policy on that. All right, so what's another great way? You have any toys in the driveway? You got a really nice fishing boat, ski boat, maybe you got a Porsche that you only drive on the weekends, or you've got some, I don't know, whatever it is. But you know what? Sometimes you can trade that to the seller as part of the down payment. And if you can do that, that is really a sweet deal, because then not only are you maximizing and getting absolute top price for the sale of your toy, whereas if you were to take that same toy and went out and sold it on the open market, chances are you would not get full retail price. Everybody wants to kick the tires and find something wrong and kind of bring the price down a little bit. But when you're, if you have a boat and you say it's worth $50,000 and I'll give you, we credit $50,000 off the purchase price, you're getting your top dollar at that point. Okay, so that's just one example. Another example of a way to raise cash is to borrow it. Now, word of caution, if you're planning on getting into investing, and let's say you have rich friends or rich relatives, and they're going to set you up and you're going to get things going, what you want to do is you want to borrow the money at least 6 months in advance. You want the money to mature in your bank account. You want to be able to show that it's your asset, that it's under your control, that you didn't borrow it 2 weeks before you applied for the mortgage. Okay, because they don't like to see that. It's not it doesn't look like it's your money, and it doesn't look like it's, you have any vested interest in that. But once you've matured that property for 6 months, you do not have to disclose where those funds came from. All right, that's real critical to know. So borrowing is always a great example, whether it's friends, family, co-workers, anything along those lines. Okay. Now, another thing is you can borrow against your property, but not not necessarily with a mortgage. You can give a mortgage to the seller. So let's say you have a condo and you have $100,000 in equity in that condo, and you're buying a piece of property, and the 80%, and again, let's say it's a $100,000 home that you're buying for round numbers. So you have an 80% loan, $80,000, but now you need to raise it $20,000. Well, yes, you could borrow against your condo, but then you have loan fees and everything else. Well, what if you were to give the seller a mortgage against your condo? Okay, so you still have the payment, but you've just saved on all those loan fees. It's pretty creative. That works. That works more often than you believe it works, okay? So that's a pretty easy one, and it does work very well. Okay. Make large, I've referred to this a couple times as we've talked about some of the other techniques in this report, but make large deferred payments, pay it off early. This is kind of like a lease option. If you're renting it for $1,000, pay $2,000 if you can afford it, with the other $1,000 being applied towards the purchase price. This is just lowering the principal amount, and yet you're still accumulating the benefit of the appreciation of the property. So that's a real good thing to consider, okay? If you have credit cards, take cash advances on them. You know, if you're really serious about wanting to be in real estate and investment, the absolute best thing that you can do, and it really helps with your credit score, but is build up a pocket full of credit cards. Now, I'm not saying run up a pocket full of credit cards, but have the credit cards available for you. So if you need to raise $10, $20, $30, $50,000, you should be able to pull out your pocket. You probably want to keep that much value of plastic in a safe place, but you ought to be able to pull them out and be able to get the cash that you need in order to leverage that in order to purchase the property. Now again, you want to make sure that you pay that off as quickly as possible. A lot of times you'll see 0%, 2.9, 4.9% interest rate for 6 months or a year, but then after that, at the end of that introductory period, then you're going to see some really high interest rates. It also works to look at offers that will come at you on a very regular basis as far as transferring values from one credit card to the other. Now, the other reason why you need credit cards if you're going to be a real estate investor is because you're going to have a lot of expenses in getting the house rehabbed, and that's one of the best ways. You know, if you're on let's say it's a 30-day rehab, you put it on the market, it's on the market for 30 days, and 30 days escrow, well, you can float, and you can just make your minimal credit card payments on the repairs, the repairs, the merchandise, the parts, and anything you can put on the credit card. You're going to make minimal payments for 90, 120 days, and then when you sell the property, then you pay that particular credit card off again. And if you just keep each property on one credit card, then it keeps it real easy for taxes and accounting purposes as well. All right, well, by now I hope that I've convinced you of the advantages of acquiring your home or your investment property by leveraging it with no-down techniques. The key to success is to be thinking creatively. You've got to step outside of the box, okay? And if you want to acquire a specific property, then you take it and you will use the advantage of leverage and to avoid tying up your own cash in that property. In the future, as your equity grows in that property, you're the one who gets to take advantage of it. And if the interest rates come back down low, then that's an excellent time to refinance and to take your equity out and be able to use that as leverage again in the future. All right, and you can keep leveraging your money and putting it to work in new projects. So I hope that this has helped, and I hope you've gotten a lot out of this. I know that I've certainly enjoyed sharing it with you, and I hope that if you have any real estate questions, if you want to get into a great creative offer, talk with me. And I've got lenders that I can work with. I've got some great ideas, and we can always try and find property, even if it means looking at many properties until we find that right one. I'm your guy, okay? I'm John Occhi with the Excellence in Real Estate team, and you can always reach me at 951-443-6259, or go ahead and send me an email to thehouseseller@gmail.com. All right, well, thank you very much, and until next time, you make every day a great day, okay, because every day is just so precious. All right, thank you very much, you and yours, and God bless you.